here we have the bulls and bear. Now, these two animals were use the method of attack to symbolize a market that is going up and a market that is coming down. That is just the reason why we have the bulls and the bears in Forex. Now you can see the head when it comes to mode of attack. This one is up and this one is down. So what it means is that in a bull's market, we expected to buy. And in a bear's market, we expected to sell. So let's see the full meaning of that. So let's talk about the bulls now, which is also known as bullish. You can either call it bullish or bull. Then it's also known as long or buy. So when you hear something like the market is bullish, you know the market is buying. Or when you hear something that I want to go long on, example, I want to go long on Euro USD, it means I want to buy Euro USD. So bullish, bull, long, buy, they mean up direction. So if you buy, you make profit when price eventually goes up. Let's say the market is here and you're predicting that the market is going to go up, and you buy from this region and the market eventually goes up, you're going to make profit because you predicted the direction where the market was going to. If you think the value of euro against the US dollar will rise, you go long or you buy. And when you buy here and the market goes up, you're going to make profit because you got the direction where the market was going to. But when you predict that the market is going up and the market goes down, you're going to make a loss because your predictions is wrong. So that's that about bullish, long, or buy. Let's see the next one. In a bullish market, you expected to buy low and eventually the market goes up, you make profit. When we go to technical aspects, we'll learn how to enter a trade and we'll see what it means, how to know the direction the market will be going to. The opposite of the bullish market is the bearish market. In a bearish market, the market is heading down, so we're going to sell. So when you hear I'm shorting Euro USD, it means I'm selling Euro USD. So short or going short can also be referred to as sell. So if you sell, you make profit when price goes down. So you sell here, and as the market heads down, you make profit because you got the right direction where the market is going to. So the trading the forex market is all about using probability. You speculate, you predict where the market is going to, using either fundamental, technical, or sentimental analysis. These are the three things you use to analyze the market, know where direction the market is going to, and go towards that direction before the move starts, and you'll be in profit. Because while going up, you can make profit, and if the market is coming down also, you make profit. That is the beauty of the forex market. You make money in both ways. So, as you can see, this is the highest point the market went to. If you sell somewhere here and the market moves down your direction, you make profit. And your profits will be calculated using these numbers here attached to your chart. We'll see how to use this to calculate profit later in this video series. So it's as simple as that. Predict the direction of the market, you go in that direction and you make profit. If the market goes against your direction, you make a loss. As simple as that. Alright, when I talk about the currency pairs, I just want to summarize it. Like I said, the first one is usually the base currency, while the second one, the currency pair, is the quote currency. If you place a buy on this pair, it means that the first one, which is euro, is strong at that time, and USD is going to be weak. So that is why you place a buy. Now, if you sell this pair, it means that euro is weak and USD is going to be strong. So that is all about that. Now we're moving over to the chart now. This is a computer view of a chart, and this is mobile view, an Android view of a chart. Now we're going to talk about bid and ask price. Remember when we talked about traveling from Ghana to USA? If you exchange one currency, for example, currency A to currency B, if you have currency A and want to exchange it with currency B, the rate at which you give her your currency will not be the rate at which you buy it back after 1 minute. Now I'm going to explain that, but let's go ahead. From your trading platform, MT4, MT5, or whatever trading platform you're using, there's something we call the ask and the bid price. We're going to see what this tells us about the forex market. What is spread? Spread is the price difference between the bid and ask price. The spread is measured in pips. Okay, whenever you want to place a trade, either on the computer or on your mobile, you have two prices. In the case of this is the first one, is the ask price, and this one, the bid price. It means that when you want to buy, you are quoted on this price, and if you want to sell, you are quoted on this price. So it means you can buy and sell at an instance at the same price. Now the difference between this ask and bid price is what we call the spread. Now I know this can be somehow technical, and I know it took me some time to understand the concept of this spread, but as time goes on, you're going to understand. Just know that when buying, let's say you have Mr. A and Mr. B, at the same time, one decide to buy a currency pair and the other one decide to sell, you are not going to be quoted at the same price. You're going to buy at different prices. That is what it means. Then the difference between that buy and the sell price is called spread. And you know something about this spread? This is what your brokers charge you for placing a buy or a sell. And you have to know something. We tend to trade where the spread is minimal, because the higher the spread, the higher you're going to pay. Like I said initially, the major currency pairs, they have a low spread, while the minor and the exotic pairs, especially the exotic pairs, have a very, very wide spread. So that's the reason why you should concentrate on the major pairs so that you pay less whenever you want to place a trade. Spread is measured in pips. So how do we measure the spread? It's very easy. The bid price, and this is the ask price. Now, what's the difference between the bid and ask price? When you do this calculation, you're going to land at 2 pips. So this becomes your spread. Remember, the base currency and the quote currency, Great Britain USD, is an example used here. So this is the bid price, and this is the ask price. So the difference between both of them is the spread, and that spread is measured in pips, and pips is the movement in the market. Like we saw the chart moving before, each of those movements is regarded as a pip. Just the way you take a footstep forward, you can take 10 steps forward. If it's on your trading app, those steps you take forward can be regarded as pips on your trading platform. Alright, let's talk about pips and pipettes. We've started this before, but let's dive into it in details. The market moves in pips. Each step is calculated in terms of pips, which is the 4th digit number after the decimal point. Now you can see this is decimal point. This is 1, 2, 3, and 4. There is a 5th, but that 5th number after the decimal point is a fractional pip called pipette. You don't need to bother yourself about pipette for now. Just forget about it. We consider the 4th number after the decimal point. So the word pip in Forex is percentage interest point, and can also be called price interest point. That is the meaning of the pips or pip you're seeing. And remember, in the market, price move from one place to another. So if the Euro USD moves from this to this, that is a 1 pip move, because 6 to 7, from 6 to 7 is just one number in between, which is 7 minus 6 is going to give you 1. Example here, when you subtract this from this, now the subtract, whichever comes first doesn't matter. If you have a negative number, you're going to throw the negative away, you throw the decimal point away, and you make use of the fourth decimal place after the point. We don't care if you have a negative number, just throw it away, throw the decimal away, just use the numbers. So pip is used by traders to show change in value between currency pairs, while pipette is the last decimal place of a quotation. Pipette is a fractional pip. Example, when you have a wall clock, you have the hour hand, the minute hand, and you have the second hand. That second hand is just there, but we don't actually make use of it. So for now, you don't need to bother yourself about pipette. The pip is what we're going to be using throughout our trading. So we'll move to the next one, how to calculate pips. To calculate pips is just addition and subtraction. For example, if this pair Euro USD moves from this to this is 50, or this first two, this is 0.7, this is 0.7, so they are constant. But this one, this is 50 and this is 58. The difference between these two numbers is just 8. So we say the Euro USD has increased by 8 pips. And if you do normal addition and subtraction, this is the equivalent of that 8 pips. The fourth digit number after the decimal. So you can then write it as this or this. Then again, if Euro USD move from this to this, now what's the difference between these two numbers? 50 and 85. That is 35 pips, or you write it like this. So you can see that calculating pips, you just have to add and subtract. And if you get any negative number, you throw the negative away and just make use of the number. Negative can only occur when in the case of a losing trade. So the same thing here, 1, 2, 3, 4. This is a pip, 8 is a pip, and this one here, which is called a pipette, is a fractional pip. Now look at this. When market moves from 2468 to 2469, is a 1 pip increase. And when it moves from 68 to 78, is a 10 pip move. And when it goes from 468 to 568, it's a 100 pips move. But in case of a losing trade, it moves from 68 to 58. That is a downward move, because like I told you before, the chart is calibrated to go up. Let me show you what I mean. If you look at this place right now, this is 151, but up here we have 167. So the chart is designed to go up like this. Hope that is clear. So in this case, it's a movement in the opposite direction. That's why you have a negative pip here. Alright, now we talked about the all non-JP pairs and the JP pairs. Remember, when we say all non-JP pairs, it means pairs without JPY. For example, Great Britain USD, Euro USD, Euro New Zealand, any pair at all without JPY. how do we calculate the pips? It's still the same thing we've been talking about. This is an extract from the chart, our trading chart. This level is 1.31200 and this one is 1.31000. Now when you find the difference between this, though it can be done in two ways, let me show you what I mean. Let me show you how to do this so that you don't get confused. Now I start from the one at the top, 1.31200. I subtract this one below. Let's see, 1.31000. I'm going to have 0.002. Now remember, we consider 4 digits or 4 numbers after the decimal point. So this number you're seeing here in your calculator is same thing as 0.0020. 1, 2, 3, 4. So this last number here is 20. That's what we have, 20 pips. Now in this example, I subtracted this one from this. Now I'm going to turn it the other way around now. I'm going to subtract this one from this because I want to show you something. So I start with this one below, 1.31000, subtract 1.31200. Now what I'm seeing here is a negative. So what I'm saying is that you ignore this negative, throw it away, we don't need it. So that at the end of the day, you're still going to have 0.0020, which still give us the 20 pips. So it doesn't matter which one you subtract from the other one. Just know that we don't need the negative sign. Just take the value to the 4th decimal place. And whatever you have there is your pip value. So that's what this place is trying to illustrate to us. So it says that when Great Britain GBP USD moves from this to this, it's a movement of this or 20 pips. That is how to check that. Let's look at all JPY pairs. So I'd like to do these calculations so that we'll see how it's done the normal way. Then I'll also go into the chart to show you how you can do this without using your calculator. So let's look at this. Let's subtract this from this. So I say 1, 2, 2. Before that, you can see that the JPY pairs, they have 3 numbers after the decimal. So remember, we don't consider the last one. Consider the 2 after the decimal. That is because it's a JPY pair. JPY pair are those pairs that contain JPY as one of the currency pairs. So 122.956. I subtract 122.366. And I have a 59 pips. Now let's take it the other way around. 122.366 minus 122.956. I have a negative 59. We don't use negative. We will take the 2 after the decimal point. So I hope that is clear. And if you come to this place, you say JPY pairs are, they say that there are some currency pairs that are expressed using the second digit after the decimal point. And those currency pairs are all JPY pairs. For example, the pips of the yen based currencies such as USD JPY, Euro JPY, Great Britain JPY, Australian dollar JPY, any pair with JPY, this is how you express them. So in this case now, if this move from here to this, it's a movement of 55 pips. We ignore the last digits. And that is how to deal or calculate pips for all JPY pairs. So here is a kind of summary for everything. This is a JPY pair. Consider the 2 digits after the decimal. Here is a non-JPY pair. You consider 4 digits after the decimal. So when we move from 23 to 24, it's a 1 pip movement. And when we move from 20 to 21, it's a 1 pip movement. And like I always say, 1, 2, 3, 4 is what we need. This one is a pipette. You should know that by now. So pip again is the smallest amount by which a currency quote can change. So pip is the movement on our trading app. So this is just the summary of pipette for JPY pairs and non-JPY pairs. There is also a way to calculate that of gold. Gold is a pair that has just 2 digits after the decimal. So if you understand what we did here, you will discover that if gold is something like maybe 1996.12, you have to disregard this last number and you consider this one when calculating your pips. That is how to calculate pips on gold. When I mean gold, I mean this pair. Let me quickly go to the chart and show you. I think I have my gold open somewhere here. Okay, that is it here. If you look at this very well, this is 1885.95. So simply disregard the last digit here, then do your calculation based on one number after the decimal point. That is for gold. It's as simple as ABC.